As I'm speaking to you right now, something crazy is happening, even something insane. And it's actually completely unnatural on the markets because so-called safe haven assets are getting crushed, just like meme coins. Even crypto has just dropped, literally, as I'm recording this video, below $80,000. And if you're thinking, wait, shouldn't it be the other way around? Well, don't worry, because that's exactly what we're going to break down today. And it might not be over yet, because next week could be even more intense since there's a macro factor at play. One we thought was buried, but it's back on the table, and the market hates that. The market hates uncertainty. But before that, I've prepared a little action guide for you, specifically to get ready for the next phase. I'll put the link in the description. It's 100% free. And don't hesitate to leave a comment to let me know what you think. Feel free to take advantage of it. You just have to enter your email address and you'll receive it directly. Anyway, let's get started because something crazy just happened. It's something we rarely see. That is more than $7 trillion, and it might not even be over yet, have evaporated in just 36 hours. And this time, it's not with obscure cryptos or meme coins, but with precious metals. And the statement is clear. You saw it in the thumbnail. We're witnessing the biggest crash in decades. In detail, what happened? Silver dropped by 30%, falling below $85. Gold fell by 13.6%, dropping back below $4,900. Palladium dropped by 21%. And these are movements we usually see with meme coins, not with assets that are supposed to protect your capital. And that's exactly what's happening right now. There's even a bank that went bankrupt. I'll talk to you about it in a moment. But it shows one thing. When the market panics, really, everything becomes liquid. Even so-called safe haven assets. And meanwhile, what's happening? We have Bitcoin, which isn't spared either, and is even back to the same level as in April 2025. And above all, Bitcoin is dropping out of the rankings of the world's largest assets. Let me remind you, it had climbed to 5th or 6th place. And yes, you heard right, it hurts the market's ego, the crypto ecosystem's ego, but you have to keep things in perspective. Because for now, it's mainly the direct result of a massive deleveraging. That's the big problem on the market right now, and it hasn't been solved. And this cleanup doesn't just affect crypto. As you've seen, all asset classes are affected. And after a crash like this one, there are two possible reactions. Either you panic, you sell in a panic, you sell while you're in the red, which might not be the best solution, or actually you take a step back. CZ summed up this situation perfectly because he reminds us that even gold, even silver, assets that have been around for millennia, can get wiped out in just a few hours. And we've seen it, minus 38% and minus 15%. With gold, for example. So just imagine Bitcoin, which has only existed for 17 years, is under regulation, under pressure, and faces skepticism. What could happen in a few years? And I'll let you imagine what that means for other cryptocurrencies, unfortunately, which are even younger. Will they still be able to withstand it? I was just talking to you about this during the live 2 days ago, but as you understand, we're still right at the very beginning of this industry. It's taking a hit, but right now, the entire market is taking a hit. Is this a sale? Let me know in the comments what exactly you're doing. And to add a bit more to all this, we have the future president of the Fed, whom I introduced to you yesterday, named Kevin Walsh. And he just made a very strong statement. Now, it's not a statement from yesterday, but from several months ago before he took office. And he clearly said that Bitcoin absolutely belongs in a portfolio and that for those under 40, Bitcoin is the new gold. That means one thing. It means that the new generation is turning or will naturally turn, not towards metals, but towards digital assets. And when this kind of message starts to take hold at the highest political and even monetary levels, it's rarely insignificant, because what comes next could be great. Especially if, or even more so if, the market hasn't yet priced in this kind of news. For now, no matter what the news is, the market is correcting. And in a market that's already under pressure, any number, as you know, that comes out unexpectedly can set everything off again. We had the US PPI for December come out and it was hotter than expected because we're talking about more. 0.5% month over month when 0.2% was expected. That's a 3% annual increase when 2.7% was expected. So what you need to understand is that we have a higher PPI. That means costs are rising on the producer side. So this has an impact specifically on the consequences of a possible rate cut by the Fed. And these costs often end up filtering through the economy and impacting consumers. So bottom line, we have a Fed that's more cautious, bad news. Interest rates could be kept higher for longer, which is more bad news. And we could see more nervous markets as if that weren't enough. And Bitcoin could become more sensitive to even the slightest news. Bad news, in short. And now we also have some news that frankly doesn't reassure anyone. Clearly no one. It's that what we call, this bank called Chicago Metropolitan Capital Bank and Trust, has become the first bank failure of 2026. Is this the start of a long series? We'll see. But it's not just a regional bank that's going under. It's a harsh reminder that, first of all, interest rates are still high. We're at 3.75%, 4%. Liquidity is under pressure. We don't even have liquidity. QT ended on December 1st, but we're clearly not in QE, and balance sheets are fragile. And this kind of announcement is enough to add another layer of stress to a market that's already under pressure. That might be one explanation why even gold, even silver are correcting very sharply right now. And finally, the event that markets hate, the United States is officially entering a shutdown. So a partial shutdown, of course, which is triggered over the weekend. So possibly no immediate reaction except for the crypto market, which is reacting. We're talking about 79,429. At the time I'm recording this video, don't hesitate to hit the little notification bell, because when I publish this video, you'll get the notification on YouTube right away and you'll have the latest information. Bitcoin is even correcting to $79,100. We're talking about less, 6.13%. You can see it here on Kojo, which is the investment app I recommend. You also have the link in the description if you want to take advantage of it. We're even dropping below $79,000. Never try to catch a falling knife, but for now things are going badly. You can see here in the markets, Nvidia, the S&P 500, gold, silver. Gold is correcting. We're talking about $4,895 at the time I'm recording this video. So the shutdown, why is it dangerous? It's because, in fact, the pressure hasn't disappeared. It's just been postponed for now until Monday with this partial shutdown. And at the open, there will be three things to watch. One, the futures, two, the volatility we already have, and three, political uncertainty. Because if Bitcoin corrects over the weekend, what's it going to be like for traditional markets when they open on Monday? And you know it, the market hates uncertainty, even more than bad news. And even if there's the possibility of a real shutdown on Monday, we're also especially watching certain numbers next week. I mentioned it to you because on Tuesday at 4 p.m., what do we have? We have what's called the JOLTS, which are the job openings. So it measures the number of open positions in the United States and allows us to assess the pressure on the labor markets. Okay? We also have on Wednesday at 4 p.m. the ISM services, which is the activity index for the services sector. Okay, sure. But on Friday at 2:30 p.m., we have the unemployment rate in the United States. That's probably the number, the most important of the week, because it's directly linked to the Fed's dual mandate. Because if we have an unemployment rate, or in any case, if we have an unemployment rate and it's confirmed on Friday, that's very low. Or if we see a decrease that would confirm the strength of the labor market, that would give the Fed even more reasons to ease its short-term policy, which for now is not what is being predicted. And so that could weigh on risk markets. Next week, we have three risks, three figures, and three potential sources of volatility. Now tell me in the comments what you're watching. Are you constantly watching Bitcoin as it keeps dropping? Are you buying during these phases? $79,000 at the time I'm recording this, which is just a few minutes before publication. And tell me in the comments what you're keeping an eye on. The shutdown, macroeconomics, the purge in metals, or is it the sales? Are you buying back? Are you waiting? Are you selling? And if this daily update helps you see things more clearly, consider subscribing and sharing. And above all, turn on notifications so you can be informed in real time when the video is released. We'll meet again tomorrow for what we call the spot margin, and on Monday for the daily update. Don't hesitate, go get the guide now. Take advantage of it. It's 100% free. You just have to enter your email and you'll receive it directly, the action plan right here. This was Julian. Hang in there. You really need to fasten your seatbelt right now. We're going to take a breather. Have a great weekend. Take a step back from the markets. If you need to, if it's affecting you mentally, if you're on the verge of cracking, and we'll see each other on Monday. This was Julian. Ciao.